and welcome to Startup Street. I'm Ritu Singh, and with me are Arundhati Ramanan and Shruti Mishra from the Mumbai newsroom. Here are the top headlines from the startup space. Venturi Partners secures $150 million in the first close of its Fund 2 to back high-growth consumer brands in India and Southeast Asia. The fund is set to make initial investments of $15 to $40 million in 10 companies across high-growth consumer sectors. It aims for a final close of $225 million by June next year.
Startup ecosystem enabler BizData unveils 1,000 crore rupee Pulse Fund 1. The fund will prioritize investments in sectors such as AI, SaaS, fintech, health tech, deep tech, defense, EV mobility, and green energy. The fund will focus largely on opportunities in India's Tier 2 and Tier 3 cities.
Tech growth brand Tuco Kids lands an investment worth $4 million in Series A funding round led by RTP Global. The capital will be used to deepen the company's brand presence, product innovation, and expand its presence across both online and offline channels.
Former CoinDCX executives launch AssetWorks. It claims to be the world's first AI-native investment intelligence platform designed to help everyday investors make informed decisions in under 60 seconds. The beta launch took place in August.
And the market regulator SEBI has given its nod to Boat's parent company Imagine Marketing as well as Urban Company to raise funds from the capital market. They are among the 13-odd companies that have received SEBI's approval since August to go public.
Well, those were the headlines we've been tracking for you this evening. On the hot seat today, Aditya Birla Group's Tomorrow House of Brands has raised $50 million from ServiceNow Ventures to accelerate its tech-powered fashion vision. Now, the deal brings ServiceNow's agentic AI and automation platform into tomorrow's playbook, offering faster speed to market, sharper consumer insights, and omni-channel experiences. From digital-first names like Bewakoof, Wrong, and the Indian Garage Co. to building an AI-first model for scaling new-age fashion brands, Tomorrow says it's ready to blitzscale the next phase of profitable growth. Joining me now is Prashant Alluru, the co-founder and CEO of Tomorrow. Prashant, welcome back to Startup Street. First, tell us, what does ServiceNow Ventures' $50 million investment mean for Tomorrow at this stage of growth? Like I mentioned earlier, it isn't just capital. It brings AI and automation into the mix. How do you see this partnership reshaping the way you build and scale fashion brands?
Absolutely. Thanks a lot, Shruti, again, for having us on your show. I think in the last 3 years, I think you've been a part of our journey, and this is our first round of external funding. We've been well capitalized so far with the backing from Aditya Birla Group with more than $150 million funding before this first round of funding. So, of course, this is definitely growth capital for the foundation we've laid. We've got a portfolio of very strong brands that solve for Gen Z and millennials. Each of them have multiple growth engines, and this round gets us to fueling that to the next stage, not just for growth, but also profitable growth. But like you said, for us, this round is not just capital. It's all about taking our belief system that building new age brands was all about tech and data science and AI-led approach. How do we take that to the next level with the power of Gen AI and agentic AI? And we couldn't find a better partner than ServiceNow Ventures globally in terms of putting AI at the forefront of scaling fashion brands. And we are the first, possibly the first brands business globally that they've backed. And that is also a strong validation in terms of the foundation we've built on the capabilities on AI with the fashion value chain.
Okay, Prashant, you just spoke about Tomorrow's technology and data science-led playbook. If you could give us an example of how AI is driving speed to market or consumer insights today, where does tech give you an edge over traditional players?
Absolutely. I think if you think about the fashion value chain, right, it all starts with the power of design differentiation and product innovation. So one piece that we've always believed in is how do you spot the best trends, how do you sort of forecast demand, sense demand, and bring the best of fashion, both global fashion and regional fashion, to our consumers, which is the more ed model. We also take that across our value chain, whether it's in simple decisions we take, pricing, marketing, etc., but all a deep efficiency around automation across the value chain, right? Whether it's sourcing operations, supply chain, across the back end and the front end of the business. And I think to us, this deepens our capability and takes us to the next level of agent automation, but also hyper intelligence when it comes to decisions that our teams make. And the next wave would be the shopping experience getting transformed in terms of how the shopping experience across online and offline is being fundamentally reimagined and reinvented with Gen AI.
All right, your portfolio spans digital first names like Bewakoof, Wrong and the Indian Garage Go. And fashion is still seen, like you mentioned, as a design and trend-driven industry. Quickly, if you could tell us your learnings about Gen Z and millennial consumers that's helping shape the next phase of growth. And based on those insights, are there any new offerings in the pipeline?
Sure. I think one of the biggest learnings for us is for Gen Z and millennials, the brand association is not just about the category of the product you're selling. It's all about the community and the brand love and the association with the community. Of course, brands like Bewakoof have been at the forefront of building these kind of communities. I think we're deepening that more broadly in terms of how the consumer looks at the brand, not just as a fashion lifestyle brand, but as a community that you associate yourself with, where the purpose is beyond the product you're selling. In terms of the next moves, I think one of the things that we're thinking about is how do we bring the power of many brands to the consumer in a more curated, more personalized experience? And we're starting to dabble with a shopping experience which is more curated, more personalized, but also with the promise of faster delivery. Of course, quick commerce has come to many categories, but we believe that fundamentally in fashion as well, the faster delivery promise will shape up quite nicely. And we're starting to invest in pilots which help us test. Of course, our individual brands are already investing in more curated shopping experiences and faster delivery. We'll bring all of that together under the Tomorrow umbrella as a multi-brand D2C platform, which will then allow for the consumer to find all the fashion needs that they're solving for at the fastest speed possible.
All right, so faster delivery in fashion. But Prashant, you've spoken about wanting to blitzscale the next phase of profitable growth. What does blitzscaling look like in fashion, and how do you balance that ambition with unit economics? What are your revenue targets going forward?
We've always believed in, not just unit economics-led growth, but, focusing on good growth and not just chasing bad growth. I think over the last 2.5 years, even post-acquisition, we've made a lot of strides in terms of improving unit economics. But now with the power of AI and Gen AI, I think we believe there's a lot of efficiency across the value chain in terms of being able to scale, not just with high hyper-growth metrics, but also with very strong unit economics and strong efficiency.
Okay.
That's one piece of the puzzle. The second piece, of course, is all about in the fashion business. It's about being able to predict what is likely to sell and being closer to demand signals. I think we're running a much sharper and tighter cycle, so our teams are able to make not just sharper decisions but faster decisions more in real time. I think that will just help us take the current unit economics focus to the next level. In terms of our ambition and targets, I think we're currently at a $125 million run rate. We'll close the year, $150 million run rate. We'll close the year closer to a 200 million run rate. Our ambition is to first cross the 500 million threshold, and then the journey is to get to the $1 billion longer-term ambition we've always had.
All right, getting to the $1 billion mark. On that note, Prashant, I'll have to wrap up our conversation. Many thanks for joining us on Startup Street today, and wish you the very best with all your aggressive growth plans.
Thanks again for having us.
And on What's Brewing today, India's clean energy push is getting a battery boost. Offgrid Energy Labs, a deep science startup from IIT Kanpur, has raised $15 million in Series A funding led by Archean Chemicals with participation from Ankur Capital. The company is commercializing its patented zinc gel batteries, a safer, non-toxic alternative to lithium-ion, and will use the funds to set up a demo facility in the UK and lay the groundwork for a gigafactory in India. With India targeting 500 gigawatts of non-fossil capacity by 2030, Offgrid is positioning zinc gel as a homegrown solution to meet the country's massive energy storage needs. Joining me now to outline the firm's growth plans is Rishi K. Srivastava, the co-founder of Offgrid Energy Labs. Rishi, thank you so much for taking time out and being here with us on Startup Street. You've just raised this $15 million led by Archean Chemicals. What does this funding sort of mean for Offgrid, and how will it accelerate your journey from lab innovation to, sort of large-scale commercialization?
Thank you for having me. Yes, so this Series A raise is essentially to help us get on the path of commercialization. So, zinc gel batteries, we've taken it from the lab stage, certified, and it's actually a product stage now and getting into commercialization. So we are setting up, as you rightly said, a demo facility in the UK, wherein we are going to basically use it as a test bed to validate the manufacturing of our batteries, and thereafter be able to launch the first gigawatt facility, which our plans currently include to be building in India.
Sure, and zinc gel is what is patented and is being pitched as a safer, sort of non-toxic alternative to lithium-ion, right? So what makes this chemistry sort of stand out, and how does it compare in terms of cost, safety, and scalability?
So very relevant. So, zinc is actually one of the oldest chemistries in the world. What we've done at Offgrid Energy Labs, we are a deep science IP-led, R&D-led company. And so what we've done is we've taken the existing chemistry, which is around zinc bromide, and innovated, in three vectors. We've innovated on the chemistry itself to make it more reliable, scalable, and safe, and also most commercially viable, for stationary applications. The second thing is we've democratized the materials. So the materials that we use in our batteries are globally democratically available. They're available widely in India, in Europe, in Africa, in the United States. And the third thing is we've really done a lot of innovation in the area of manufacturing. So we've optimized the manufacturing processes in a manner which is very sustainable. So we use 50%. Our carbon footprint on manufacturing of zinc gel batteries would be 50% lower than what it is relative to lithium. And in terms of what's really different and what's unique, what excites us the most is that the energy storage market, especially for the stationary segment, is growing very, very rapidly. So, the International Energy Agency expects a 15x growth on sustainable energy storage, renewable energy storage in the next by 2030. In India, it's a massive demand of about 411 gigawatt hour, and that's the gap that we're addressing. We're basically focused on really three applications. The first is the net zero applications for commercial and industrial enterprises, who today use conventional sources of energy as well as some renewable energy, but don't really have the storage for it. And we fit that gap and segment exceedingly well. Then peak shifting, which is India's blessed, for example, many parts of the world India's blessed with abundant,
Absolutely.
And our batteries are making it commercially viable to restore that and use that at the peak hours in the evening. And
Sure, absolutely. We're running out of time, so if you could quickly tell us, you're also setting up a 10, megawatt demo facility in the UK before building a gigafactory in India, right? So why start abroad, and how does this fit into your global expansion strategy?
So the UK facility is basically a test bed for us because the ecosystem in the UK for precision manufacturing of battery technologies is very well developed. So we're a homegrown company out of India, and we now want to ensure that we use the world's best standards to be able to optimize, our manufacturing, and thereafter bring that back and set up the gigawatt facility. So it's really a validation point, and from an ecosystem perspective.
Sure.
Which,
so it's basically a test bed for what you want to do globally. And in 10 seconds, what are the kind of revenues you're making, and where do you hope to end this year?
So we're a pre-revenue company. As I said, we have about 25 families of IP. We've created over 50 IP assets over the short reign that the company's been in being. So we hope to be commercial once we launch the batteries with the gigawatt plant, which should happen, post this this facility. So currently we're pre-revenue.
All right. Okay, great. Rishi, thank you so much for taking time out and being here with us on Startup Street.
Thank you for having me.
Well, digital lending player LendenClub Group has reported a 34 crore profit for FY25, which is a sharp turnaround from the loss of 14 crores in FY24. For the full year, the consolidated revenue came in at 236 crore rupees, which was up 28% year-on-year. They also reported a positive EBITDA of 50 crore rupees. For more on the company's financial performance, though, and the road ahead, joining me now is Bhavan Patel, the co-founder and CEO of LendenClub Group. Bhavan, many thanks for your time here on CNBC-TV18. Before we get to those numbers, a quick word on what really life has been like since August of last year, when RBI lifted these restrictions, or rather imposed these P2P lending guidelines. How did you have to pivot business to really survive?
Okay, so last couple of years, we have been already working on how do we create more sustainable ecosystem around the credit facilities in the India, around the two products which we offer in the market. One is small ticket size personal loan and a merchant loan. So over the period of time, we already reduced our overall exposure at a group level on P2P lending. However, during last 1 year, there was a massive turnaround. As you rightly said, that minus 14 crores to 34 crores. So we took a lot of regulatory advisory calls in the financial year 23-24, and which resulted into minus 14 crore worth of losses during that financial year. However, things started recovering even before August 2024 guidelines coming into the place, and we were well prepared, well placed in terms of adapting the new set of regulations. Hence, while the regulations changed, a new amendment came into place, but we did not get hampered when it announced because we were already prepared.
Well, Bhavin, but let me ask you, if you could, sort of give us a better sense of, even with these regulatory headwinds that have really shaken up the sector, how were you able to report the profit? I mean, it's come as a bit of a surprise.
Yes, absolutely. I think startups are there to surprise the traditional way of thinking, and hence we have registered such kind of revenue as well as the profit. So, as you know that we have been operating two different brands under the LendenClub Group umbrella. One is InstaMoney, which is our loan service provider platform. So that has been one of the major revenue driver in last financial year, with around 50% plus revenue at the group level. P2P has been around 30 to 35% revenue generator, though the growth is there in the P2P side as well. But definitely the main driver has been LSP, and in coming financial year also LSP is going to drive the major growth in terms of revenue. Second point, while the new amendment of the P2P regulations came in August 2024, out of 10, we were prepared with all 9 pointers out of 10. So on the very first day, we were compliant with 9. So we did not have to pause lending on our platform. It was merely a few days when we had to realign our workflows to comply with the new set of regulations. So we were way ahead in terms of thinking what could come, and our platform was already prepared to accept the new regulations which were supposed to come in August 2024.
Bhavin, I still want to understand how much of the disbursal of 16,000 crores that you've done to date has actually come since the new RBI P2P guidelines came into force, and also what happens now to your NBFC application that was returned by RBI?
So between August 2024 till March 2025, we disbursed roughly around 1,000 crore worth of loan through the P2P lending platform. So that is a kind of disbursement which we have achieved through P2P. The initial phase was little difficult. So between August to November, the numbers were much lower, somewhere around 50 crores per month. However, towards the end of the financial year, those started growing up. At this moment, we are disbursing anywhere between 150 crore to 200 crore per month through the P2P lending platform. In terms of our NBFC application, it was written by the regulator. And at this moment, we accepted that point, and probably we are more focused on building the platform business. So if you look at all the 3 domains where we are operating, P2P lending platform, LSP platform, and TSP platform, all our platform businesses. At this moment, we do not have any plan to go into on-book lending domain.
Well, Bhavin, many more questions, but hopefully we'll pick this up another time. That's all the time we had for today's show. Thanks so much for joining in, Bhavin.
Thank you.
Coming up, it's time for a short break. But on the other side, online retail giant Flipkart is gearing up for the festive season with its flagship Big Billion Days sale. The company is scaling up its supply chain and placing a big bet on its tech product pipeline. Details when we come back. Stay tuned.
Welcome back to Startup Street. India's online retail battlefront is shifting into high gear as festive season approaches, and Flipkart is pulling out all stops for this year's Big Billion Days. From a revamped app to scaling its supply chain, the e-commerce giant is betting big on tech to take on rivals and rising quick commerce apps. Shilpa Ranipeta gets you the inside track from Flipkart's Tech Day in Bengaluru. Take a look.
Of India's festive season, and Flipkart is gearing up for what it calls its biggest Big Billion Days yet. Ahead of the mega sale, the company has unveiled a whole host of tech innovations that span the entire ecosystem. Now, the Flipkart app also has been completely refreshed with a new look right from the homepage to even the order details page. The company has also ramped up search, product innovations, haptic feedback, shoppable videos, all in a bid to capture a larger share this festive season.
Customers are going to see a lot of new features. For example, a lot of personalization has gone in, a lot of recommendations, a lot of innovations in terms of search. Search has moved from lexical to being very meaning-oriented. I think that's a big change for us. The entire app has been revamped. I don't know how many of you saw the app previously versus today. App has gone through a complete reimagination. It is very location aware.
For sellers, Flipkart has also revamped its seller app with AI-powered insights to help them manage their operations. Now, on the supply chain front, Flipkart says that it is placing delivery hubs closer to customers to cut down delivery times and also support growth in Tier 2, 3 and beyond markets. Now, Flipkart says ahead of the Big Billion Days sale, it is gearing up to scale its operations 12 times its usual capacity to meet the surging demand.
One is the physical layer of making sure that the hubs are located close to the demand, both on the first mile and the last mile. Three aspects. What we did was we refreshed the seller app all the way through. We cleaned up the interfaces we had for listing management. We helped them manage their rate cards better. We made sure they can look at the settlement-based scoring algorithms correctly.
But Flipkart won't have it easy this time. Competitive intensity is at an all-time high, not just from rivals like Amazon and Meesho, but also from quick commerce apps like Blinkit, Instamart and Zepto, all of who are muscling into festive shopping with categories like beauty, snacks and even puja essentials. Now, Flipkart is countering this with its own quick commerce offering, Flipkart Minutes, which is now live in 19 cities and 2,900 pin codes. And the company says that all of the Big Billion Days sales offers and deals will also extend into minutes as the lines between e-commerce and instant commerce blur. Flipkart has also launched a new loyalty program called Flipkart Black, taking on Amazon Prime with a free YouTube premium subscription.
Any event which has an early access, Black members are going to be right up there with a red carpet welcome. These are some things on Flipkart, and like I said, YouTube Premium is unlocked. Free cancellation on Clear Trip is already unlocked. Inaugural early bird pricing of 990 rupees. This is the annual price. This is an early bird offer. But the regular pricing will be 1499.
The stakes are massive. According to a Datum report, India's online festive sales are expected to cross 1.2 lakh crore rupees this year, and quick commerce will account for a significant share there. For Flipkart, though, the Big Billion Days will be its ultimate stress test of its big tech bets, of its supply chain expansion, and its ability to hold its market share in India's most critical shopping season. In Bengaluru, Shilpa Ranipeta.
Okay, and on that note, we'll wrap up this edition of Startup Street. Thanks for watching, but stay with CNBC TV18. More news and updates will continue after this break.